Is the longest consolidation in crypto history finally ending? The crypto market has a funny way of testing your patience. For the past 18 months, holding XRP has felt a bit like waiting for a train that keeps getting delayed. You check your phone, you check your charts, and it's just moving sideways, keeping everyone in a state of constant suspense. But right now, as we move through this late of June 2026, something massive is building behind the scenes. A well-known market analyst on X right here named Bird, right, as we can see here on our screen, he recently shared a weekly chart that has the entire community buzzing. XRP is currently trading at around $1.14, trapped inside a massive structure that is running out of room. Bird pointed out that it all takes one single God Candle, which is a massive vertical green bar on the chart, to completely wipe away a year and a half of absolute boredom and frustration. According to his analysis, July is looking like the absolute crunch time. We are seeing a setup that hasn't appeared on the charts with this much clarity in years. So in this video, we are going to break down exactly what this macro structure looks like, what the key levels are, and why the next few weeks could catch the entire crypto world completely off guard. So let's start with our very first question. Why is the falling wedge pattern nearing a critical point? So to understand why this moment is different, we have to look at the macro trend lines. If you trace the upper resistance all the way back to the peak of $365 from July 2025 right here, you see a ceiling that has suppressed every single rally for nearly a year. No matter how much good news came out, the price just couldn't break through. At the same time, we have a rock solid support right here, stretching all the way back from the late 2024 lows, cutting through 2025 and 2026. Now, these two trend lines are moving toward each other, creating a textbook called falling wedge pattern. Right now, XRP is sitting almost exactly at the apex. This is the very tip of the triangle where the walls close in. Now, here comes my opinion. I've learned that when an asset is squeezed this tightly into a corner, the market is forcing a decision. Volatility has dropped significantly, which means trading volume is compressing. So my view is that the market is completely exhausted. And that is exactly when institutional players like to step in. The fact that this wedge is resolving right as we enter July tells me that summer liquidity might give us the explosive directional move we've been waiting for. Now, could a final shakeout below $1 happen fast? Will happen first, I mean. Whenever a chart looks this perfect, professional traders knows that the market rarely moves in a straight line. When Bird posted the setup on X, the community reaction was immediate, and one specific perspective stood out. A lot of traders are anticipating one final dramatic shakeout that briefly dips the price below the psychological crucial $1 mark before the real upward expansion begins. Now, here's my opinion to that. Right, let's just highlight this part. Honestly, a final flush down to 90 or 95 cents wouldn't surprise me at all. And frankly, it might even be healthy. And crypto big market movers love to hunt for liquidity. They know exactly where retail investors play their stop loss orders, which is usually right around that big psychological $1 price level. If they can trigger a quick panic drop, it clears out the remaining weak hands, allows smart money to fill their bags at a discount, and fuels the engine for a much stronger, sustainable rally. If you see a sudden flash dip in the coming weeks, don't panic. It offers the final signature of a major market bottom. Now, what key levels decide if the breakout is valid? If we want to see the green projections on the chart becomes reality, XRP has to reclaim the descending resistance line that has capped our growth. The trading at $1.14 means we are hovering right on the edge of the trigger zone. It's a very binary situation. Either the bulls step in with massive buying pressure to shatter the upper trend line, or the pressure forces a deeper retest of macro support. So, in my opinion, for me to be completely confident that the macro breakout is real, I am watching the daily and weekly candle closes. It's not just about wicking above resistance during a random 4-hour pump. We need a solid daily close above the trend line with expanding trading volume. If volume stays low, it could just be a fake out. But if the volume profile spikes right at the apex, it confirms that large buyers are moving capital into the asset, validating the target back toward the old highs. Now, here is our final question. Why is July becoming the ultimate target month for traders? The timing of this pattern isn't random. Falling wedges have a mathematical expiration date based on where the trend lines intersect. For this specific weekly chart, that intersection points directly to July 2026. This has created an immense amount of anticipation in the community, with some members noting that a multi-year accumulation phase is finally reaching its grand finale. So here's my opinion. My perspective on this is grounded in market cycles. The summer months in crypto can often be quiet, but when a major token breaks a multi-month consolidation pattern during a low liquidity period, the moves tends to be exaggerated. Because there is less resistance on the order books, a surge in buying pressure can cause a rapid upward cascade. This aligns perfectly with the concept of a God candle, a move so swift that it leaves the late buyers chasing the price. Now, here comes our overall conclusion. When you step back and look at the entire picture, the narrative surrounding XRP right now is all about the calm before the storm. The textbook falling wedge has done its job of boring retail investors and shaking out impatient capital over the last 18 months. Now sitting at $1.14 near the absolute apex of the structure, the room for sideways movement is officially gone. Whether we get a clean breakout straight from current levels or a quick liquidity hunt below $1 first, the structural data heavily suggests that the prolonged consolidation is in its final days. July is shaping up to be a defining moment on the chart. Keep your eyes on the volume, stay disciplined with your risk management, and don't let short-term volatility cloud your view of the macro trend. And this finally ends our video. Thank you very much for watching, and see you on the next one, or you might just as well watch this next recommended video right here.